Alright, okay, now we're close to our entry point here, right? So I want to take a trade around this point here, alright? Let's go to the trade station and to trade one lot. Okay, so here is my Aussie. I want to sell the Aussie here. My order, sell it, sell a market order. One lot here. We've got a good price, 64.56. Okay, I'm going to submit it. Alright, so now our limit is going to be 25 points away from here. Alright, so if the market moves 25 points in our favor, which is a high probability time, right, we're going to make 1% return on the account. Okay? Alright, so 25 away from 57 here is going to take us down to 22. Alright, that's where our profit limit is going to be at. Alright. Our stop, if we go back to our chart, our stop is going to be above, if we just move this here, go back to the chart, this point here, alright? Now if I look at this particular area, look to the left hand side of the screen, you notice there that the high there is 65.30. So we're going to put our stop 4 points above there. Sorry, 5 points, 65.35. Okay, let's save that. Okay, now exit that, and now here's our trade here. Alright, we're in the market now. We've got our stop in, 65.35, we've got our limit, 64.22. That's where we want to take trades at. Now at this point in time, I'm not interested in risk to reward ratios here. Okay, we're looking at a quick move here in the market to make some good returns at a high probability time. Okay, so what we're going to do is we're going to just have to wait and see how this trade transpires and how it works out. Okay, if I go back here, alright, what we would like to see in this next hour before this closes, right, and that's going to be in another 15 minutes time, we want to see to continue our move, either we want to see this price here close lower with an increase in volume, or if it's still an up bar here with a decrease in volume, that would signify that price to the downside is still the favorable position. Okay, so I'll come back when before I do that, let me fill in the spreadsheet. Okay, we took a sell at 64.54. Our target it's going to be 64.29. Is that right? Let me double check. Okay, open at 64.57. Sorry, that was my mistake. 64.57 is the 64.57. Okay, sorry, the target is 64.32. Let me change it on my trade station. Okay, I'm going to change the place. Okay, just going to change the limit here. Actually, let me check one more thing. Okay, 64.57 minus 25. Yep, 64.32 is my profit target. So I'm going to put on here, here's 64.32, replace this. The limit is 64.32. Alright. What happened there? It didn't work. Replace that order again. Numbers around the wrong way. 32, 64.32. That's better. Right, just double check. There's my limit, there's my stop. We're all good. Okay, we've got $1 per lot, margin required. And this is interesting. If we go here to the trade station, Right, you notice here, up in this here, it cost us $64.63 to do this trade. So out of our $974, we had to put up $64.63. Let me put that in. $64.63. Right, that's going to be important. I'll show you later why. Just gives us an idea where our cutoff point, worst case scenario, would be. Okay, so we're just going to come back. I'm going to come back closer to 11 o'clock. Our stop, let me put these lines in. I like to represent red as my stop point. Okay, it's going to be 65.35. That's what my stop is going to be. Alright, right above there. My profit limit is going to be 64. 64.28. Now why did I say 64.28? It's because I'm taking into account the 4-point spread on the Aussie dollar. Okay, the 4-point spread on the Aussie dollar from 64.32 is going to bring it down to 64.28. Alrighty. Okay, so that there is, I've got everything set up. I just now have to wait for price action over the next hour or so. I'll come back to you round about closer to 11 o'clock time, where I will look at a second trade. Okay, catch you then. See you on the other side.